Good afternoon, everyone. I'm Ali Simpkins, the local fund specialist at Momentum Investments. Firstly, welcome. Welcome to our masterclass, and thank you for sharing the afternoon with us. We like to make these sessions personal and as interactive as possible, so please don't hesitate to pop your questions in the Q&A section for our presenters to address throughout the presentation as well as at the end. In today's session, we're going to focus on thematic investing. Now, I don't know about you, but whenever I open my social media pages, I'm bombarded with buzz phrases such as chat GPT, AI, machine learning, robotics, all of those futuristic themes. So to discuss these themes, we've invited Eugene Botha, our Deputy CIO, as well as Jako, our Head of Portfolio Solutions, to unpack these in more detail, as well as share a little bit more about our Momentum Fund, the Momentum Future Trends Fund. This fund has been recently launched. I truly hope that you enjoy the content that we share with you this afternoon and enjoy the session with us. As mentioned, please don't forget to add those questions to the Q&A. Please welcome Eugene and Jako. Over to you.
Thank you very much, Ali.
Thank you, Ali. It's a pleasure to be here, and welcome to everyone on the call as well. It's it's great to spend some time with you. And maybe just to quickly reiterate what Ali was saying as well, please keep those questions and comments coming through. And hopefully we can make it as interactive and conversational as possible.
Cool, thank you very much, Jako. So, I guess as Jako and Ali already mentioned, I guess the idea for this session is really to go through how we think about the world from an investment perspective in the thematic investing world, right? So, and I'm hoping really that we can make it as interesting to you as this fund really is to us. So, from an agenda perspective, what we'll do is we'll actually jointly present on this session where Jako or myself will actually do the introduction and a bit of background on megatrends and thematic investing and how we think about the world, as well as our approach to putting these funds together. What is it? Why do we think it's a useful strategy to have as part of your solution? Why we think it's a useful strategy to invest into? And then I'll pass on to Jako to talk about what are the trends, what are the themes that we've identified that we think is worthwhile investing into for the longer term, and also take you through a bit of the portfolio structure and characteristics and how the fund has actually performed over the shorter term since it's been launched. And then right at the end, we'll also open for some questions and have a bit of a panel discussion around some of the questions that you've actually posed in the group. So without further ado, if we can then start off with a bit of the introduction and the background on thematic investing. And I think all of you guys will agree with me if I say that we are living in extraordinary times, right? Where disruptive innovations, ideas, and societal changes are embraced in today's world, and this is really creating opportunities alongside it. Right, so technological innovations, demographic and social trends, urbanization, and environmental challenges are really here to stay. And the importance thereof is being forced into the spotlight on an ongoing basis. It's you can, as Ali mentioned, you hear about it on a daily basis when you open your social media. So we believe the time is therefore right for a diversified solution, such as the ones that we manage on behalf of our clients, to invest in the potential growth of these future trends as they will shape the global economy and the world at large. Thanks, Jako. So what really is thematic investing, and how do we actually define thematic investing? So we believe these are really investment opportunities that will persist as disruptive ideas and technological advancements that are rapidly reshaping the world we live in. So all of these themes are not necessarily created equal. there's a distinction as as some of them are structural and long-term in nature, and some of them are shorter-term anomalies. But every change represents an investment opportunity, and that's what we seek out to exploit. Thematic investing it's the art of identifying these opportunities based on personal experiences, and then aligning the investments with your beliefs and ideas. So maybe simply put, thematic investing is more of a top-down investment approach that helps investors gain exposure to these trends and ideas through a portfolio of companies that are expected to benefit most from these changes. So therefore, I guess the thematic investing, if I have to summarize it in a couple of points, is therefore focused on broad macroeconomic and macroevolutionary themes. It's about the requirement and understanding of how the macro factors will influence and impact the world. It's also about the acknowledgement that the broader themes play an important role in determining the best investment opportunities, particularly over the medium to long-term investment horizon. It's about or it allows actually investors to capitalize on future trends by identifying macro level themes today that are likely to flourish over the coming years and even decades. It's really a long-term play from an investment perspective, but it really focuses on predictable long-term trends rather than specific companies or sectors, and therefore enabling investors to access these structural once-off shifts that can actually change an entire industry. So, Jako, if we can move on to the next slide, maybe just talking about the growth of thematic investing over the recent years, is that thematic investing or the investment approach actually saw its rise in popularity after the global financial crisis in 2008. So that caused investors to focus the shift away from traditional investment methods. So I guess prior to the global financial crisis, the defining investment principle was rather focused on determining or forecasting future stock movements by analyzing data patterns from the past. Whereas actually then most portfolios were positioned based on those historical information rather than expectations of the future. But as we actually experienced in 2020, any financial crisis actually makes forecasting similar future risks and events extremely difficult for this very reason. And investors have therefore come to base their investment decisions more strongly on in-depth analysis of expected changes in the future. So this is where thematic investing becomes a critical tool. So it really offers a different and complementary approach to classic investment management methods, in such that it seeks actually to capitalize on opportunities shaped by transforming developments in the future as opposed to the history. So growth of these funds over the last 5 to 6 years is clearly evident in the slide that we've got in front of you. So and as a result, with millennial investors' preference towards easy to understand theme-based products and portfolios, we believe that this space will surely get a lot more traction in future. Thanks, Jako. So if we then move to the next section in terms of how we from a momentum perspective think about the world and why we think that momentum investments is best suited to manage such a fund. I quickly want to unpack how we actually do it, and it's through a effort of collaboration. So from a momentum investments perspective, I guess the outcomes-based approach is there to identify the sustainable trends that fit the client objective. So it's always the long-term client objective focused when we try and identify these themes and the appropriateness of the themes for a specific portfolio. The fact that these trends are typically macro global kinds of themes, and the fact that we have got MGIM, our global investment management team sitting in London, having exposure to broader global research as well, that helps us scout the entire universe for innovative ideas and solutions that we can actually include and isolate and manage as part of the broader portfolio as well. The third component is our global partnership with Robeco. So they've got access to world-class research, execution strategies, portfolio construction methodologies, themes. They create their own kind of solutions around packaging certain themes, and that is an extremely important concept for us to also therefore have the ability to access that research through Rubico and through our ongoing engagements. And then fourthly, but as importantly, is our relationships that we've got in the market with academia as well as other research providers in the market. So that dedicated research focus and collaboration allows us to have access to not only the practical as well as the theoretical world and backing behind certain themes in the South African market or in the global market, I guess. So Jako, if we can then go to the next slide and then quickly touch on, why do we think it's an outcomes-based approach and why it fits into, the broader outcomes-based solution as a component within a broader solution, is that first and foremost, it's risk managed. So if Jako unpacks the themes that actually goes into the overall strategy, you'll see that it's diversified. We don't want to pinpoint and hang out on one specific theme, but it's a diversified set of themes that we believe will play out over different tenors, over different time periods, and to different extents as well. So the performance and the risk aligned to any one specific theme is actually diversified. The risk of one theme not playing out and not being a success is therefore also minimized by the fact that it's diversified across various different themes in the market. Second of all, is that the outcomes-based investment philosophy is about the long term. It's about investing for the long term. And if we truly believe that these trends that we want to isolate and incorporate into a future trends fund, it is about the long term. And if we believe that those trends will actually be lead to structural shifts in the economy, we have to believe that it's long term, and therefore it's aligned to the longer term goals of our clients as well. It's about growth. It's so growth for us is important because the mere reason for us investing is about growth, right? You want to grow your wealth, and that's part of what we want to achieve through investing in these long-term trends. And then fourthly, and as importantly, is it's about sustainability. So we want to invest for the right reasons. There's lots of focus around sustainable investments, positively influencing the world that we all will retire to, and that's also what we want to incorporate in the solution as a whole. So maybe standing still on the ESG component a bit, Jako, if we can move to the next slide. And according to some BNP Paribas research that we've seen, more than 3/4 of investors, the main reason for using thematic funds is for the exposure to sustainable or ESG solutions. Now, with a leading preference being an overall focus on the United Nations Sustainable Development Goals or the SDGs, and that's then followed by climate change and renewable energy as well. So inherent in our thematic fund, we also believe that given the global focus on responsible and sustainable investing, it's imperative to take into account that the SDGs will shape the future. So we therefore believe that the mega trends or these macro trends that we identified from an investment and growth perspective are also naturally aligned to these SDGs. Comforting to say the least that given our focus on making a difference, and now we play a role in shaping the future. Thanks, Jako. So maybe to understand thematic investing alongside the traditional way of investing, I think it's also important to understand that thematic investing should not be seen or considered to be a substitute for traditional investing. So I guess much like the way that active and passive management coexists and complements one another in actual fact, so does thematic investing or trend investing sit alongside traditional investment as well. So if you think about traditionally, institutions and fund managers have been following a relative investment approach, which is focused on either adhering to or deviating from a benchmark or index. One may argue that this approach may have some challenges or shortcomings relative to thematic investing. It has a relatively short-term focus on benchmarking and measures of success, working actually against the concept of having a very long investment horizon. So then there's the potential drawback of not having enough of a forward-looking perspective by incorporating emerging trends as well. So When it comes to constructing a traditional portfolio, therefore, managers are often concentrate, or I mean, they often concentrate on, specific countries or sectors, or that specific share that they want to isolate, and that they actually feel could actually outperform the index or the benchmark. Now, on the other hand, thematic investing doesn't specifically have to have a benchmark or benchmark itself against an index or strive to, so it doesn't have to have an index or benchmark itself against a specific index, as it should actually strive to achieve a long-term absolute return goal, rather than just beating a specific index or benchmark. So I guess, even though benchmarking is an important tool to manage a specific client liability, and we do incorporate benchmarking as part of the thinking of a broader based solution, the outcomes over the longer term, thematic investing actually complements this approach to deliver the return and the risk profiles that can diversify away from the disadvantages that we actually see in the traditional approach. So that really unpacks, some of the high-level differences between, thematic investing and the traditional way of investing. So thanks, Jako. So I think I'll then hand over to Jako to unpack a bit, what are the trends that we've identified, why we've actually identified these trends, and how we actually put them together, and then venture into how the fund has actually performed over the short period since inception as well.
That's perfect. Thank you very much, Eugene. I think again, thank you for the background and the introduction to the Momentum Future Trends Fund. I think before I go into some of the trends and the themes themselves, I think what really stands out with this fund is not just the collaborative effort that Eugene mentioned earlier, but also the rigor and the time that we've taken to put the solution together. Really what we're talking about now, and what I'm also going to show in a few slides time, is really the work that's been building up since, I guess, the latter part of 2001. So really, or middle part of 2001 already. I think so. So really what we're looking at and what we're managing now is the brainchild of something that was conceived, so to speak, 18 to 24 months ago. So we've really put a lot of time and effort in terms of thinking through the themes themselves and the investment rationale behind it. So for me, again, talking about mega trends, the word itself actually consists out of two thoughts itself. So mega being large, of course, or big, and something that is significant in terms of the way that it influences things, and trends is something that evolves. So if you think about the Momentum Future Trends Fund, it's really thinking about something that captures big shifts and big changes and ongoing changes in the market itself. So really, when we started looking at the main investment themes, we sat and of course a lot of this has got its roots in investment research. So again, with Eugene being the head and the pioneer of our research hive, which is our research capability within Momentum Investments, it was really important for us to sit down from a research and a portfolio management perspective to first and foremost identify investment themes that we believe had investment merit. It had to have investment merit that is linked to economic rationale, so to speak, because otherwise this fund would just become a flavor of the month like anything else. So really the intent for us, when we sat down and we started working on this entire investment proposition, was to say, well, what is it that we're looking for? And one of those things, and the most important, is that it's something that's sustainable. So therefore, we also wanted to look at various themes that complement one another. As Eugene mentioned, they definitely have different attributes, different investment terms, so to speak, and different economic drivers. So we wanted to provide clients in our own portfolios that invest into this fund with an avenue to investment themes that complement one another. So again, from a research and first and foremost, from a qualitative perspective, we identified 6 very specific themes that I'll unpack in just a second. And they, for us, touch on climate change, which I think probably needs very little to no introduction. If I think about, call it the Paris Agreement a couple of years ago, we're close on 200 or 250 countries signed or agreed to minimize and restrict global warming, for example. That is something that is not just going to be here for the next year or two. This is something that's going to be pretty much, in our faces, so to speak, for the next couple of decades, and possibly even more. So these are that's sort of the thinking that we went through, and as I mentioned, we'll go into them individually. But just at this point in time, just for your benefit, those 6 themes would then capture climate change, technological innovation, demographic change that we'll talk to a little bit, space exploration. It sounds very beyond 2000-ish. Just maybe a bit of a side point, when we started talking about this, and I just wanted to just allow me to digress for just a second. Eugene and I were saying that I'm sure many of you will probably remember that show called Beyond 2000, which was, it's probably on the day, even it was on TV the day even before Mnet and things like that, probably. And I distinctly remember looking at things like those little Segway things that you can now, you see the security guards at shopping malls riding them, etc. And those were the kind of things that were so mesmerizing in a way, and it's stuff that you looked at and you could never fathom, us getting to a point where those things become mainstream. We're still waiting for flying cars, mind you, but I guess the point is that that world that we saw 10 or 15 years ago or 20 years ago is really the stuff that that's here now. So space exploration sounds very futuristic, but in actual fact, it's stuff that's really here now and quite relevant. Shifting economic power, of course, that's, if you think about high level, that close on 40% of the world's population resides or lives either in India or China. And if you look at the demographic of the population, it's also skewed towards the younger generations. So shifting economic power to a large extent looks at that dynamic and that phenomenon that we expect to play out over the next couple of years. And then maybe the last one is one that we can all relate to. I mean, if you have Netflix, if you have Amazon Prime, if you or your kids, and I'm not making a distinction, are into online gaming, those kind of things, that all touches on those lifestyle aspects. It has really brought the world a lot closer, and as individuals, we're also able to align to that and also benefit from it. So if I go into what was important for us as well, looking at these 6 main themes, is that, as I mentioned, that they carried weight from an economic perspective. So there had to be an economic rationale for each of them persisting over time. And then we had to look one level deeper, because what's very important is that there are various themes that tie into a certain macro trend. And that's when you can imagine the depth of research and all the analysis that we had to do. But if I look, for example, again, by way of example, just looking at climate change, what was important for us and what we linked to that mega trend was really themes that touched on the likes of water provision. Again, I think as South Africans, of course, we do appreciate the scarcity of water. Perhaps now, yes, we see the dams are full and the rivers are in flood, but it's not the necessarily all the time, of course. So we have an appreciation for it, and that's not specific to us. It's something that really touches everyone across the world. It's not just water provision, but it's the provision of clean, safe drinking water, which takes it a step further. So really, I mean, whether it's that, whether it's food and food security, again, the more recent Russian-Ukraine conflict highlighted the need for food resources, and food scarcity came into play very, very quickly. And then I guess climate change wouldn't be climate change if you don't look at renewable and sustainable energy provision. Again, you know, these things speak to, I guess, even something that we are all thinking about and concerned about as we sit with load shedding stage 6, for example, today. So again, those are themes that would support a macro trend. And then we'll talk a little bit about the execution and a little bit later, but then maybe just quickly looking at technological innovation for us there. This is a little bit of a matrix type stuff. If you were to think about it from that perspective, it's ones and zeros. It's a lot of big data, how big data is used, how it's stored, and now it's also commoditized over time. So that's quite important from that perspective. Artificial intelligence, I think that goes without saying, that AI really touches us in many ways that we don't even know. I mean, whether it is you walking into a pharmacy, for example, and some AI face recognition actually gets used for certain products to be advertised before you walk past them. Whether it is artificial intelligence in the investment space. I mean, Eugene can even talk to that, given that, you know, that those are some of the things that we're investigating. But so it's about all of those. We did list blockchain applications there. So important that the fund will not buy cryptocurrencies. What's important here is more the use and the value of having computing power that sits behind certain applications. So of course, blockchain technology is not just used for crypto, it's used in other, you know, whether it's data mining, data management, data organizing as well. So it goes beyond just some of the stuff that we are exposed to. Demographic change for us is equally important. Again, I spoke about the shifting dynamic from an economic perspective from the west to the east. Equally important for us is demographic change, and how certain aspects and certain themes talk to those change. Now, I guess one of those is medical provision. Again, you know, thinking about the advancements that were made in terms of healthcare provision, the way operations are conducted, whether it's virtually nowadays using robotics, etc. It's looking at that. It's the provision of healthcare to what in the developed world really is an aging population. If you look at the average age of the population, it has increased significantly over time. As I mentioned, the real propeller stuff is probably more could also be in a space exploration. And here we're talking about, again, it's technological advancement, but it's focused on a certain industry. So yeah, think about Tesla, think about SpaceX, more SpaceX rather than Tesla, I guess. But think about companies that are involved with the launching and the maintenance of satellites, communication satellites. As we've seen more, this is perhaps more as a stunt, but there's been talk of space, what do we call it, space tourism for quite a while. You know, some of these guys like Richard Branson taking a plane up into space and coming back, and a bunch of other rich guys. But in time, you know, those things may become more accessible to a broader range of people, not just the billionaires and the multi-billionaires of the world. I did speak a little bit to the shifting of economic power, and then lastly, as I mentioned as well, looking at lifestyle. Here it's more about experiences rather than some of those hard and fast things around whether it's climate change, etc. So I think from this you can already get a sense that we wanted to create a solution that caters for different economic regimes. Yes, again, given that it's equity centric, you would expect the fund to also experience market drawdowns, and through bull and bear markets, the fund would do better and less well. But of course, the intent is again from a philosophical and from a portfolio construction perspective, for the fund to be diversified. So for us, maybe just to then look at the Future Trend Fund, there are 5 very key principles in what we put together. First and foremost, as we mentioned, it's multi-themed. So it's not a fund that's just looking at healthcare. It's not a fund that's looking just at climate. It's really all of those rolled into one. Eugene spoke about the need for long-term capital growth. Ultimately, for us to seeing this as a fund that would help grow wealth, not just in absolute, but also in real terms. So over and above inflation. The equity-centric focus I've spoken about. Eugene, of course, that mentioned the risky nature of the portfolio, given that it's equity or equity-like. And then true to form, of course, the diversification that we've spoken about as well, whether it's currency, industry, etc. And what I'll show you just now is how we actually monitor that as well. I think, again, one of the benefits of sitting within a large organization such as Momentum is that we can actually allocate and use capital to acquire systems and the like, for us to really look through all of these portfolios to understand what we actually invested in. And talking about the fund itself, as I mentioned, it's a single fund. It's a rand denominated fund, but the exposure is exclusively taken offshore. So again, the fund would benefit from rand weakness, for example, given that translation from dollars into rands. And the reason why we're also primarily executing offshore is because of the investment opportunities. So again, the use of ETFs, exchange traded funds, for example, is extremely valuable in this sense, because again, linked to those macro themes or trends and themes that we've identified, we can handpick ETFs and investment vehicles that are directly aligned to those. So that translation from the initial qualitative judgment in terms of macro themes and trends can get translated all the way through until we get to a portfolio execution level as well. So again, it will be managed actively. The churn in the portfolio we expect to be fairly low in terms of the rotation of themes and investment vehicles, because that also incurs costs, correct? So from a cost perspective, we need to manage the frictional cost within a portfolio. So it would be slower moving from that perspective, albeit that there's, of course, as I mentioned, active overlay over and above that. So maybe just to maybe pull it together in terms of a couple of very specific items. As you did mention, we do look for the fund to as a benchmark, as a reference point. I guess we always quote the MSCI All Country World Index as an investable universe. As you can see, our performance target is around the 3 to 5% level over the long term. So expect the fund to be more aggressive and more volatile from that perspective. I guess for those of you that are familiar with tracking errors, etc., the tracking error would probably hover around the 4 to 5, maybe even 6%. So it does lead to a more aggressive portfolio and a more some variation away from the benchmark. And then from a risk management perspective, just purely from a pure return perspective, as you can see right at the bottom, I guess as aggressive as the fund may be, we also have an implicit target in our minds that we do not want to see the fund underperform the benchmark by more than 10% over a rolling 12-month period. That is something that we are quite fixated about, and that is calculated on again, apologies for getting into all these technical things, but on a 95% confidence level. So in other words, what we're saying is that 95% of the time, we would not expect the fund to breach that. If something really significant happens in markets or global economies, there is a small, with the 5% probability that we may actually breach that limit. But that is very much front and center in terms of our portfolio construct and management processes. This is what the fund looks like currently, as at the end of December. So as you can see, again, so we've talked about all the themes and all the trends and all those kind of things. But when the rubber hits the road, this is essentially how those themes or those trends are divvied up within the fund. So again, we'll have a large component of the fund focused on demographic change, climate change, and environmental impact, and then also on technological innovation. The other three smaller trends or themes around lifestyle, the shifting of economic power, and space exploration are included in the fund, but at a lower weighting. And that represents, I guess, in a way, a bit of the expected experience from those themes, but also the available opportunity set for us. And then to manage some of the risk in this portfolio, we've also included a passive component. As you can see, at the end of December, it was around 17%. And that is quite important because we again see application for this portfolio both in a multi-asset class construct, as we manage the multi-asset class portfolios at Momentum, but it's also important on a single standalone basis. So clients, it does not have to be in a multi-asset class construct to be consumed, and therefore we do need to manage the risk within the portfolio itself for those clients that do opt to buy into it as a standalone. That's perhaps just a bit of a breakdown if you were to go one level lower from a portfolio perspective. So I'm not going to spend too much time on it because it does get a little bit busy and detailed. But again, I do believe the presentation will be available for download a little bit later on as well. So you're more than welcome to go through this in your own time and leisure as well. And then what we also included was, again, as I mentioned, we do have we can't manage this fund without having risk systems and portfolio views attached to it. So what I included for just for illustrative purposes is really what the portfolio looks like. Those would be the list of ETFs included, and together with that, just high level, we can already ascertain what the contribution to risk from the various ETFs are, what the portfolio risk looks like on an aggregate level, whether you look at it in total risk terms or in active risk terms. And then we, of course, have the ability to now also slice and dice a little bit deeper if we look at the portfolio. So again, we can look at whether or not our qualitative judgment of the themes are playing out in terms of how the portfolio is actually positioned, and whether or not some of those growth, let's call it almost the growth themes, are coming through in the portfolio. So again, it just helps to connect those dots from a qualitative to a quantitative world, so to speak. And as you know, from a Momentum perspective, we do put quite a large emphasis on investment styles or risk premiums, even if we think about traditional long-only investing. And I guess what you'll pick up from this portfolio as well is also just, we monitor that closely and in conjunction with all the other moving parts that we invested in as well. Then maybe just a quick comment too in terms of portfolio performance. Of course, the fund went live the first week of September, so it doesn't have a long investment history. And what I just wanted to show you quickly was just of the various ETFs that we include in the portfolio relative to an all country or even include the Nasdaq index. These pages, it gives you a sense that there's a diversified return stream from the ETF that basically we wouldn't expect all of them to be the same way or look.
Apologies for that. We seem to have some difficulty with Yaku's connection. I'm quickly going to try and see if I can bring up the presentation from my side, and I'll quickly continue the discussion.
Hi, sorry. I think you may have lost me there for a second, Eugene.
We did, Jako. So I mean, I was just about to bring up my the presentation on my side, because I mean you did. There were some connectivity issues on your sides towards the end there.
Oh, apologies for that. Fortunately, we can reconnect quickly, and I just want to make sure that the presentation is up and running again.
It is up, yes, Jako. Thank you.
Cool. Apologies for that little gremlin that crept into the system there. But I guess what I was saying, so from a portfolio perspective, we needed some time just to make sure that all the portfolio settlement and processes, compliance and reporting, and everything else works the way it should. So we do that with our own money, as you can see at the bottom. So we seeded the fund with our own Momentum's assets, and then towards the latter part of December, we actually made our first, call it portfolio allocation to the future trend fund. So I would almost see January 2023, which is last month, as our first full month in a portfolio that has scale and with all the I's ticked and or dotted and the T's crossed from that perspective as well. And it was also a good month from that perspective, given that, of course, we saw a bit of a resurgent equity market. And the fund was up close on 11% for January alone. And then maybe just one or two quick slides for me to end off before we go into questions and answers. I think one question that we sometimes get is how do we look at thematic or trend portfolios or exposures in conjunction with our other traditional and core equity strategies. And I think Eugene actually spoke about that a little bit earlier on. So I'm not going to belabor the point, except to say that we do see it as the complete equity suite, as part of that complete equity suite. So what I mean with that is that it's an alpha driver. It's a fund that we believe with given its aggressive alpha or outperformance target, it's something that there's definitely a space for within the portfolio alongside traditional and core investments. But one obviously has to be cognizant of the sizing of that strategy as well. And that will take on different shapes and forms and exposures for different clients, again, given different risk profiles and risk tolerances, etc. So like, as I mentioned, we've only just started allocating to this fund now in a Momentum focused fund of funds. And we'll start building more of an exposure there as well as time progresses. And then again, not to talk through worthy slides. This will be part of the pack that will be available for download a bit later on. But again, this just talks a little bit again to the risk profile, the return objective, and how we see that being consumed, so to speak, from a client perspective. So I'm going to end there and hand back to Ali. I think, Ali, you've got a couple of things you wanted to mention or raise at least.
Yes, definitely. Thank you, Jako. Thank you to both of you for presenting on the Momentum Future Trends Fund and giving us a little bit more detail around thematic investing. Once again, to our audience, we do apologize for the break in connectivity, but I'm sure we can all relate that we're all dealing with the Eskom woes, which brings us to our first question. One of the questions on the chat actually asks, how can this fund hedge South African investors against the woes of Eskom?
No, that's probably the hot topics or hot potatoes. So I'm going to pass that on to Eugene first. I see he's smiling.
Yeah, well, I guess it's a difficult one to answer, because I mean we're going to be stuck with the Eskom woes for some time, right? But at the very least, it's the fund gives us the opportunity to invest offshore. I mean, so that's the first component of it. It also gives us the opportunity to invest and fund, new ideas and innovative ways to actually solve for, energy crises, for anything from a energy perspective where there might be sudden hiccups. The mere fact that we're trying to fund innovative ways that can change and shape the world differently going forward. I mean, this is the opportunity to do that within this fund, right? So I mean, I guess to some extent there's a deliberate shift away within the Future Trends Fund, away from pure energy kinds of investments, and the very reason is therefore to fund alternative ways of getting around the issues that the energy sector and industry as a whole faces. So whether that's going to solve all of South African problems, so and I doubt that that's going to happen over the shorter term, but at least there's some innovative ideas in the pipeline, and that we are investing into to help solve the energy issues. So from a pure energy, I guess, perspective, but also from a social and environmental perspective as well. So I'll definitely be positive from that perspective.
Yeah, and I think maybe if I can quickly add to that, Elia, for me, it's investing in the technology that would make some of the energy provision cheaper and more accessible in the future as well. So, whether it means, through the process that we picking up exposure to companies that make more efficient solar panels, or whether there's some other way of harnessing energy, then we want to capture that from the onset. We want to capture those industries and those exposures as they mature over time. I guess something that's very important to notice that, I think timing for us it's important, but it's not something that we're going to get right. Correct. So for some industries, we'll obviously don't want to invest into sunset industries, fixed line, I don't know, think about the old telephones, and those that you had dialing round and round. So what you don't want is sunset industries, but you want to capture some of these that are actually in the growth phase as well.
Perfect, 100% agree. Jako, speaking of those innovative ideas, we have another question coming through that says, is the government using our hydroelectric power to its fullest, bearing in mind all the rain we've had in the summer season? So again, speaking to those innovative ideas that you guys touched on.
Yeah, I think, again, I think some of those, we do use, or we do capture some hydroelectric power at I can't remember whether it's at, I think it's at Gerib Dam, actually which is the largest dam in SA, right? they did actually, when they first built the dam, they built some hydroelectric generators with it, etc. And we're capturing some of it from the Lesotho side as well, through that Cahora Bassa system. So I guess in a way we are, and I think what we again, this is perhaps now taking a step away from the Future Trends Funds itself, but from a momentum perspective, we're doing quite a lot of work in terms of looking for innovative, direct infrastructure investment ideas, because I guess, you know, if you recall, there was quite a big commitment made by the president a couple of years ago that focused specifically on infrastructure spend, etc. And so we focused on it, and where the merits of those opportunities make sense, we'll possibly entertain it further. But for the purposes of this portfolio, it's not necessarily something that we can capture, given that we're looking at listed vehicles. So okay. I hope that helps. So I guess the question is, or the short answer is, yes, we're capturing some of it. Ideally, we probably would have liked to have done more, but it would require some additional investment that in a world where capital is quite scarce.
Okay, fantastic.
Maybe, can I quickly add to that, Alisa? So, I mean, sure. I guess the short answer is, to some extent we do capture, you know, some of that hydropower, but nowhere in the most innovative way, and by nowhere to this fullest extent, right? So, I mean, I don't recall exactly where, but I mean, I've actually read that in the, you know, northern parts of Europe, they've actually installed, you know, some of these hydroelectric generators within the, you know, the water supplies that actually goes from the dams to the residential areas. So I mean, it's mini generators in those water feeds. It actually, I mean, the water flows constantly in any case. So having the ability and therefore, I guess, the capital spend to invest in that kind of an infrastructure development is hugely innovative, right? So I mean, it's a hidden infrastructure, but it just continuously generates power. So I mean, that's another innovative way that the rest of the world can actually explore, you know, to help with the global energy crisis as a whole.
Correct. That's why I find this fund and this topic so fascinating, because there's so many problems that can be solved. Eugene, maybe another question that I can throw your way is, how do you determine if a theme will have a lasting change or if it will just be a passing fad?
So that, I mean, it's a difficult question to answer, but it's a very important question, Ali. So I guess the approach that we follow is, first of all, to identify those themes from a macro perspective, right? So if we can get those largest 6 themes right, then we 3/4 there already. So I mean, then it boils down to what are the underlying, you know, smaller themes that we want to capture within each one of those mega trends. And I guess there's the scope for, you know, being wrong is quite a bit higher than, you know, identifying those big mega trends. And the way that we try and, you know, get through that or diversify that risk is to have, you know, a multitude of different or exposure to different trends. I guess that's the one point. It's the other component is also just to understand where in the life cycle you are with these different trends, right? And then understanding that if you come to a phase in that life cycle where you can actually see that this thing is going nowhere, to cut those positions sooner rather than later. So I mean, I guess for us, there's 4 different phases from a life cycle perspective in these trends, and it starts off with the emergence phase, and that's where, you know, you actually see, you know, some convergence of, you know, related trends giving rise to one mega trend, right? So that already sparks some ideas around, I mean, is this something interesting to invest into? You don't see the growth necessarily yet, but it's on the verge of exploding. The next part of that phase is then, you know, the prevalence phase, where it's a rapid manifestation of this mega trend, and it spread the effects or the benefits of it spreads, you know, massively and quickly into businesses, industries, and lifestyle, and that's where you really want to have that exposure. If you can identify that you're not in that phase, or that a certain trend is not moving into that specific phase, and then you need to be careful in terms of whether you actually want to have exposure to that phase and how much or that trend and how much exposure you actually want to have in that phase. I mean, the next phase is in the cycle is, I guess, the predominance one, where it almost becomes part of society, and there's the effects and the scale of change is on a demographic and geographical scale quite far-reaching, and then I guess it comes to the end of the cycle, and also we need to identify now is the time to actually move out of a certain trend. So it's not only whether you're wrong, identifying whether you're wrong in a trend, and therefore not investing or getting out of that trend soon enough, but it's also identifying when you're coming to the end of a life cycle of a specific trend, and it just becomes part of the new normal. Then it's also an important decision that you may need to make in terms of getting out of that specific trend or sub-theme and starting to invest into something else as well.
Yeah, I mean maybe for by way of example, and one that I'm sure, like we don't have the ultimate and definitive answer yet, is whether or not electrical vehicles, for example, is still the end game. Because there's for example, some research and some stuff that's being circulated that points to the fact that perhaps electrical vehicles don't have that green footprint that one would expect. Given all the resources that gets plowed into the batteries, and of course all the energy you need to again charge your vehicle. So it could be that hydrogen becomes the new theme or the new trend as opposed to electrical vehicles, and that's where I guess that's where for the likes of Eugene and I that have a keen sense of just knowing and reading up on stuff, where that becomes very, very interesting indeed.
Oh, definitely. You definitely have to have your finger on the pulse, as they say. And it goes back to what you said earlier. This fund is not a set and forget strategy. It's very much that you have to keep looking and tweaking the fund and its allocation. So, Jako and Eugene, in the interest of time, we do have 2 more questions, but I'm going to summarize it into one. And I'd just like to understand, or maybe for you to explain to the audience, what value can be derived and delivered within advisors' toolkits for their clients from this fund, and also what makes this fund unique. And maybe that's the question that we end up on.
Yeah, so I'll touch on it briefly, and I guess Eugene can add to that again. For me, the uniqueness comes in looking, if you look at the Future Trend Fund versus what the opportunity set represents for SA investors, effectively in a rand-denominated world, it offers first and foremost that diversification from a global perspective, so global versus local. And then, but more importantly for me, from a pure portfolio management perspective, is the diversification benefits, and how we effectively spread the load between 6 main trends, as opposed to focusing on one specific one that we may or may not have a high degree of certainty on in terms of it working relative to the rest. So again, and for me, that talks a little bit to our philosophy as well, in terms of diversifying across asset classes and investment strategies, etc. So it dovetails quite nicely with that, but it is unique in that way. I think there are few funds that I think touch on so many themes to the point where investors can still sleep easy and with comfort, knowing that the portfolio itself it's not going to provide them with this boom bust sort of like scenario. So that's for me in terms of the uniqueness. I guess from an investor or an advisor toolkit perspective, it provides another avenue of growth, and one that, like we said earlier in the presentation as well, complements traditional portfolio management and long only investing. So it doesn't work against it, or it works with it, but it does provide something that is very focused on something very specific to the themes, to the environmental and social and governance factors, to sustainable development, etc. So, and it's still a high growth portfolio. So we shouldn't lose focus of that. But Eugene, I don't know if you.
No, I think it covers it, Jako. It's about that, alternative exposure to global growth, right? So I mean that's where the fund should be positioned within the broader toolkit of an advisor. I guess talking to the uniqueness, I mean often. I'm thinking in practical terms. Often you'll stand around a braai and have a discussion around, geez, had I been invested in that specific thing 10 years ago, knowing that thing will potentially change the world and have massive growth, but you just don't know how to get exposure to that specific idea, right? So I mean, I guess this fund gives you the opportunity to therefore. We know that there's lots of investments into technology and robotics and AI and space exploration, and we know that it's going to be highly likely that it's going to be a massive growth area from an investment perspective. But we don't necessarily always know how to get exposure to that, right? So this therefore gives that unique offering to have exposure to all of those ideas that you typically hear of, which is you want to have exposure to those, and at the same time it's managed in a way that it's diversified, that you don't allocate to something that is going to or is potentially going to be bust next year or the year after. Yes, there's potential for that as well, but at least you know that you don't have all your capital in one specific idea. And it's diversified across, a couple of those great ideas that you want to have exposure to over time.
Definitely. Eugene had a bit of a chuckle because me and my friends have certainly had that discussion around the braai. Jako, Eugene, I'd just like to thank you once again for sharing your insights around thematic investing. For our audience members who were interrupted by load shedding, please note that the recording will be available. And you can also download the presentation as well as a brochure pertaining to the Momentum Future Trends Fund. If you have any other questions, please don't hesitate to contact myself or your investment consultant. Have a lovely afternoon, everyone. Goodbye.